We've got Rob Lees from Mortgage Choice joining us again with our finance segment for the year. So welcome, Rob.
Oh, thanks, Peter. Good to be back.
Yeah?
Have you got any volume there on my headset?
No, I'm not sure which one you are, so just give me the thumbs up whether on
okay.
anything that's working.
No, nothing's working, but that's all right. I'll work without it. That'll be fine.
Okay.
That's fine, yeah.
Well, I can hear you.
Good to be back. That's the main thing, and as long as the listeners can hear us.
Yeah. So you've been away or you've been working?
Well, I've been away and I've been working at the same time. It never really stops. So, we had two of the offices closed down, but we're doing a little bit of work. And last week we had a week away, and then last week a week in Perth for conference.
Yeah, that's an early start of the year for conference, isn't it?
Yeah, look, they had it in July for a few years and they've gone back to January now. The hard thing about that is you're just starting to wind up and then you've got a conference on. So it's not great timing, in my opinion, but anyway, that's...
But are you motivated to hit the ground running now?
Well, I've just come back from Perth, 8:30 last night, and so getting up this morning was very hard because it felt like about 4 o'clock in the morning.
Yeah,
It was Perth time.
Yeah.
But yeah, look, I'm keen to go. We've had a reasonable break, so back into it full swing this week.
Well, welcome back to the show.
Yeah.
I hopefully we've got some great content for our listeners again this year. And so this is... Rob sent me some information over the weekend about a topic to discuss, which I'm really keen to chat because I think this is a real issue at the moment in lending. So tell us about Channel 7 and Sunrise, what you saw on there.
What prompted me to talk about this was they were talking about, and all shaking their heads, there was a bank that gave a loan to a 70-year-old applicant, and it was over a 30-year term, and they're all shaking their heads and saying, well, how can that be responsible lending?
Yeah, they're going to be 100 by the time they pay
That's
it
right.
off.
Why would they do that? And they kind of had a few different responses, but they didn't really get it. And I thought it would be a good topic to talk about.
Yeah, absolutely. So do you receive many inquiries about older people looking for mortgages?
Yeah, and it depends how you define old. From the bank's perspective, some of us won't like this, but the banks would probably define old as being 50 and over.
Yeah.
So, there's a lot of inquiries from people over 50 and certainly still quite a few from people over 60 and occasionally even people over 70.
Yeah.
And I suppose life doesn't stop when you get into your 60s. People still require finance for pretty much the same things that younger people require finance for. Probably one of the most common, sadly, is relationships that are broken up, long-term marriages that have ended, and there's a property settlement, and the funds that are coming out of that property settlement aren't sufficient on their own to buy a property, and people need just a little bit extra. It might be 100,000 or 150 or maybe 200,000 to be able to buy a property against. That's common for older borrowers. Sometimes it's a bit of debt consolidation. Renos, people still renovate when they get close to 60.
Yeah.
I don't know if I want to say this, Peter, but now that we're in 2018, next year I'm turning 60.
Oh.
I don't know. I'd said that out loud. That's scary. But we've just done a massive reno, so older people still renovate, okay?
Yeah.
So they still want finance for that. And also older people still buy investment properties.
Yeah.
And if their situation's right, well, why not?
Why not? I think that's the key, isn't it? Because further to your 60 and renovating, we did a kitchen renovation prior to Christmas, and I'm pushing that far into 50 at the moment. I've still got a couple of years to go.
How far? To 50?
I got 4 years to go. But I was standing there just recently cooking some spag bowl in my new kitchen, admiring it and loving it. And in my head, I thought, we'd been in the house 10 years, which as it turns out, it was 16 years. So it's not so bad. But I had that moment where I thought in another 10 years, I'm going to be thinking about 60 and what will my kitchen, look like then was what I was thinking.
May need to be redone again.
That's right. So I think that's where it's really difficult for the older borrower in whatever state that is for you, because like you say, that the lenders do tend to put you in the bucket, from even that 50 mark. But what's your thought on sort of older people being able to, because obviously they're not going to be working for 30 years.
Well, I think the key thing that we need to look at as brokers and also the lenders, and we're actually, the legislation requires that we look at it like this, where we need to make sure that lending is not inappropriate, it's a double negative, and and part of that is that under that responsible lending is that it doesn't place the borrower under hardship. So we need to look at, number one, have they got enough income to service the loan? Secondly, more particularly when it comes to older borrowers, is that income sustainable? So if we're talking about a 60-year-old or a 65-year-old who might be on a good income now and can repay the loan on the current employment income, are they going to be able to, how long is that income going to be sustained for if they're looking at retiring? So is it sustainable, that income? And then thirdly, if it's not sustainable, is there an exit strategy? And that's pretty much, as you know, all the banks will want some kind of exit strategy, at least for people 50 and over. Some of the banks for 45 years and over. And that's basically how 30-year loans come about for people who might be 60 or even 70 years of age. If there's enough income to service the loan. I had, interestingly, I think it was probably a couple of weeks ago, it was certainly in January, I settled a loan for a couple who are aged 72 and 73. It was a 30-year loan, and it was a bridging loan, and the end debt, that's the debt after their property sells, was $450,000. So Channel 7 would be into me over that.
Yeah.
But their situation, and this is why you can't have one blanket response, their situation is he has a very generous defined benefit pension. That's a lifetime pension indexed annually because he was a former Army officer. In addition to that, they have a very large self-managed super fund. Drawing income from that, earning more into that fund than they're drawing in income, so it's growing. And in addition to that, a very big share portfolio. So their income is probably more than the average family income, and this is retirement income. It's certainly there now, and it is sustainable for the rest of their life. And so why wouldn't? And in a very good asset position, they could have sold shares and still can do that, to pay out the loan at any time or draw them from the super. They've got all those options. So why wouldn't a bank give them a 30-year loan under those circumstances?
Yeah, I agree with you. And I think that's where it needs to be looked at, doesn't it, on an individual basis rather than a blanket rule
of
what's acceptable and define an age and says from this age we're no longer going to provide you with. And I guess the other thing for people to understand is too that, really what you're looking at is that ability to repay it in 30 years. But
that's the key thing. We don't want to put people under hardship, do we? Well, you can. We can make it 60-year-old with a 10-year term or even 5 years if they've got that much sort of that income. I guess if you were working and you had sustainable income for only a period of time, then you can look at smaller terms. That's right. That's right. But if that isn't possible, well, then that exit strategy is very important. How much have you got another property that you could sell, an unencumbered property? Have you got money in super, other investment shares or whatever it might be?
What about the families that are downsizing? So I've got a couple at the moment that they've got a decent sized mortgage on their house. He's retired. She's kind of getting close. She's got a couple of years, 5 years or so left, and they're wanting to sell up and downsize, but they're still going to be left with a mortgage. Albeit much lower than what they currently have. I struggle a bit with this one in responsible lending terms because it's not responsible, but I think, well, what is responsible? Making them sell up their house and putting them on the rental market where rents are dearer.
Well, I think that's the issue, and I've done a lot of small loans, for example, for 60-year-olds, and it's usually divorce settlement ones, 50,000, 100,000. It's actually cheaper. To have that small loan than paying rent. And gives them that current affair test that the banks all want you to look after. I mean, you're not going to force them out on the street because the landlord's up and sold. Or is it better to be paying a repayment on a loan, a small loan of $100 a week, compared to paying $400 or $500 a week in rent? Yeah.
So, Rob, what advice do you have for older people?
Yeah, I want to say, having talked about all this, my general advice, the general rule of thumb would have to be, as you get older, the goal should be to reduce debt, not take on more debt. So I'm certainly not pushing debt. I think that's the general rule of thumb. You should be thinking more about how you reduce debt, how you pay down your debt rather than take it on. That's the rule. Okay, but there's exceptions. Okay. But I think along with that, I think for anyone who's 50 and above, you really need to get some advice around taking on more debt. Very, very important. So, I mean, when I'm looking at a loan, I'm not just looking at getting the loan approved. I can get that and I can work out a way to get it approved. But the real question is, number one, when do you plan to retire, and does taking on more debt fit into that retirement plan? Because by taking on more debt, it probably is going to delay your retirement and is going to mean that you're going to have to work a little bit longer. So it's very, very important to look at that loan in the context of a retirement plan. To isolate the two is, to me, that isn't responsible.
Yeah.
So that's something that we like to do, and I'd certainly recommend get some kind of advice. That's the sort of thing we can do in our office. I mean, I've been a planner, and we also have a financial planner as part of our team. But they're things that we want to look at in that context.
On the weekend.
He did. I'm just really, really proud of him. And so he won. He was the Mortgage Choice Financial Planner of the Year, which is a
awesome.
Fantastic award.
Yeah, which just goes to reiterate, I guess, Rob, doesn't it, that, you know, it's not at Mortgage Choice, it's not just about a loan. It's a holistic picture
that's
around
exactly right.
your actual circumstances, and taking away a big award like that just is a testament to your business.
I'm really chuffed, really pleased.
You should be.
Really pleased, and I guess that's what we want to do. So again, while we're a business that actually gains an income from debt. It's not our goal to get everyone into debt.
Yeah.
We want to help people develop a strategy to get out of debt too.
And having that in-house financial planning just makes that so much better around crossing those lines between credit advice and financial
exactly right.
advice. So kudos to you, and well done on
Thank you.
know that award. It's fantastic. So
thanks, Peter. Yeah.
Oh, you're very welcome. All right. Well, Rob, if anyone wants any more information and they might be considering something like we said, a downsizing or looking to increase their portfolio, even though they may be older. Best contacts?
Well, contact me at the Blaxland office, 4739-9749, or you can just Google me on the net. When I type in Rob Lees, I come up first. So that makes it nice and easy. You should be able to find me there. Well, there's actually quite a few Rob Leeses when you look. But I think I come up first. Rob Lees, Mortgage Choice, you'll find me there, and all the contact numbers will be there.
Fantastic. All right, Rob, it's great to have you back for 2018. I look forward to chatting with you throughout the year. And I'm sure our listeners get some great value out of all your advice as well. So,
thanks, Peter.